Apparently the week is already done pretty much. Last trading session for the second, I would say, is it the second Friday? Yeah, the second Friday of August. Unfortunately, is Friday 13th. So regardless, though, we should still be careful and make sure that we have some good sort of safety measures when we trade. Today, we're going to have a quick look on the index, oil, gold, natural gas, as well as Apple. And start, of course, with the index. You recall that we are expecting that to be, up in, this is wave 4, by the way, right? So W, X, and Y, which consists of 3 zigzags, if not mistaken. So it's a double zigzag, 1 and 2, hold on, 3 and 4, it looks like to me, maybe one leg down again, and 5. Why like this, you might ask? Simply because, well, we've got like a multi-structural move in there, right? So it would be prone to assume that, with these two corrections in place as well, looking very similar, that, that correction might last a similar duration compared to this one. So that's from the 3rd of July to the 4th of August. That should be 11th of August. Maybe that, like today perhaps, might get another leg down, yeah? And from there, maybe next week, starting off next week, or maybe Tuesday next week, we might get the correction down on Monday, sorry, Tuesday, Tuesday, we'll start picking slowly again to complete the last leg to the upside, up to, well, wherever that goes. We can literally go up to, 94.72 is a very nice level because the previous wave 4, guys. Now, whether we're going to go there or not is a different case, but you can see that 38.2 is done now as we speak. 61.8 of the FIBO extension, like that's between A and B, right? Brings us to the 94. So anywhere above that is possible. However, what we ought to do once wave 4 is in, because this is probably A and this is B, might be B here and then continue lower. But if we assume that we're going to get another wave 5 over here, let's just look at this. The distance from here to here is what our wave 5 is going to be. So we're going to get around to the 61.8 anyway, right? Now, shall we just have a quick look where we are? Let's see. We did the 23.6. So it is quite probable that, we get down to 38.2, around 92.65, which means that would give us to 93.70. Okay, which is not far from 94. So that's going to be it for the index, guys. Okay, pay attention to that. The dollar, the oil, US oil. We talked about the potential of this becoming some sort of, another leg down. Still might be a case where this can be treated as, an A, B, and a C. So that will be W, X, and Y. Or, should we move higher up, get the other X here, and then the Z is also possible. Why I'm not looking at this as the main right now is because I'm not a fan of this structure over here. Okay, it reminds a correction because we've got 1, 2, 3, 4, and 5 already, guys. That's the 1 and that's the 2, or the A or the B, and that looks quite impulsive and nearly 5 waves to be a wave C, a last wave C as well, rather than a 3, because a wave 3 would really go at least 100% of of wave A, and I don't think that's the case here. You see that? We probably did 78.6 or something. There you go. So with that said, that looks to me more corrective than it looks impulsive. You might ask, well, look at this, 1, 2, 3, 4, and 5. Okay, possible, but look at two things here. One, we have a 5-wave structure up to this level, okay? Two, when we look at the correction in wave 2 and wave, if that's supposed to be wave 4, that this is wave 4, then that doesn't make sense. But the corrections here, 2 and 4, they do look very like imagined to be on the same degree, right? And last, if that's a C, we've got 1, 2, 3 impulsive, 4 and 5, which means that the impulse again is the wave 3, which makes it a bit more probable that, you know, that's the ABC done, and most likely going to head lower down now. Okay, do we get any signals on the RSI or MACD? Well, if you think about this, what does it look like? And if you also take that one in mind, that's a bit more of a bearish one, okay? On top of that, we have a rejection to enter back within the channel, right? So look at further continuation, perhaps a bounce here and a further continuation, and then a bounce perhaps, and then down further continuation. Either for that, probably that Y is going to come here, and that is perhaps going to be an ABC. Now, let's quickly have a look how we can make this an A. 1, 2, yeah. 1, 2, 3, 4, 5. That's my 3. 4 and 5. That's A, right? So how can we make that 1 and 2 and 3 and 4 and 5? That would be my 1. No, that would be a 3 that touches here. Okay, and that would be the shortest compared to all, so that's not the case. What we do is 1 and 2, and then we got 1 and 2, and then 1, 2, 3, 4, 5. Okay, which means that this belongs to this. That would be that. And the 1 and 2 belongs to this, something like that. It still looks a bit like two multi-structures. Looks a bit weird, to be fair, right? I'm not sure I like it much. But don't also forget that it could be a case that this is 1. Yeah, we're going to get 2. We're going to get 3, 4, and 5. And that is going to be an ending diagonal. That is also in play. Either way, a bit more bearish than I was yesterday or the day before. Gold, on the other hand, keeps moving up nicely as expected. Correction as I well identified, and now we've got 1, 2, 3, 4, and 5. That's 1 and 2. Probably moving up for 3 and then 4 and the 5. If we break outside this channel, we become bullish. If we don't, we remain bearish. That's for medium and also long term, because the sort of scenario to still move lower, it's valid, right? Because that's 1 and that's 2 and that's 3 and that's 4 and that's 5. That's easily done to restructure this sort of scenario over here to take into account a bit more of a bearish approach, right? But for now, what we need to do is look at how deep have we retraced. So far, we've done the 50 Fibo. Yeah, we might do the 61.8 here and then continue lower down. We'll see how this is going to pan out, but as you well see, for the moment being and short term, we remain a bit more bullish than we remain bearish. Okay. Natural gas. As expected, I told you about this signal. It was a very nice one, right? Triangle and then fifth wave up. What else do we want? Now, WX and Y here, I'm not sure that's the case, guys, because 1, 2, 3, 4, maybe 1, 2, 3, 4. That doesn't make a good leading diagonal here, but perhaps what it could be the case is 1 and 2. Then that's 1, 2, 3, 4, and 5. Yeah, and that's 4 and 5, which means this is 1, 2, 3, 4, and 5. Perhaps that's my A, then we're going to get the B, and then we're going to get the C. And that could bring us down to 23.6 or even lower down to the previous wave or to the like 38.2. since this is going to be a wave 4 anyway, right? So wave 4 usually retraces 38.2 of the full leg from one point to the other. Obviously, in this case, we are bullish, so our correction is bearish. So this is what I will be looking, guys. Yeah, I think we're going to be done. We are going to be done with our wave A fairly soon. Now, unless if this is some sort of like leading diagonal here as well. Hold on. There. Like 1, 2, 3, 4, and 5. Yeah, that's either 1 or A. That's B or 2, and that's like C or 3. It might be the C. So leading diagonal, yeah, my wave 2, my wave B, sorry, and my wave C. So both scenarios are in play, but either case, in the short term, I think I remain a bit more bearish than I am bullish. We re-entered the base channel as well. So now I will be looking at perhaps the retest first, maybe a rejection or not of the median line, as you can see here as well. Should we break that, then we'll probably looking for the one at the bottom. Okay, and quickly on Apple as well. Very interesting structure here. Last time we looked at it, we are still in wave 5, right? We don't forget that we're looking at wave 5. We've had this interesting flat over here, and then 1, 2, 3, 4, and 5 we were looking for. However, I've changed this. We've got a triangle here. I've changed this to a multi-structure mode to the upside. Why? Because I'm just comparing the correction here and the correction here, and just that don't really fit in the same degree. But if you take the minor over here, yeah, and you add this correction over here, and you compare these two, they do make a bit more sense, right? Which means very likely that, you know, that's a minor degree, since we have 1, 2, 3, and 4 as well, right? And that's a triangle. We're going to get the fifth one for 3, and then maybe a double 4 double here, and then we are going to head higher up to finally, you know, come to an end of this sort of primary 5-wave leg to the upside. Now, where are we heading? Well, it's not easy to say, as you all know, but usually our wave 4 makes a good candidate. So I'm just going to do where's the 2? There we go. And 174, okay? Now, a correction can be expected, okay? Because don't forget that triangles, guys, do not just come, you know, in one direction, because we could get something like, you know, since we've got an ABC in everywhere, ABC, 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 that could be another ABC, and then we'll continue lower, which means that's W, my triangle is in X, and my Y is the actual correction. Now, let's look quickly at where we come with that. You see? So, very deep wave 2, very shallow wave 4. So it might make sense that the triangle is done, but we need to remain above this trend line. Okay, that's all for this week, guys. Thank you very much for watching. I hope you enjoyed the video. If you did, you can show your appreciation with the like button. Leave a comment if you have a question or an alternative scenario in mind on our YouTube section. I'll get back to you as soon as I can. Enjoy the rest of the trading session, your weekend, and we'll speak again next Monday.